Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm continuing the problems on financial statement of a manufacturer. So first two videos I have completely explained how to make the financial statements of a manufacturing organization. Then 30 short questions and MCQs I have explained in two videos. And the last video, 3 main problems I have completed on financial statement of manufacturer. Now in this video, I am continuing the 4th problem. So before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep ready the problem. Take the screenshot of the solution of the 4th problem, then I'll explain all the points in detail. Now, see the 4th problem. The following are the list of balances as at 31st December 2016 for a lawn mower manufacturer making manufacturing account. Make a manufacturing account, trading account, and show the items to be taken in the statement of financial position. So from the given information, 3 things you have to make. First of all, you are required to make a manufacturing account. Secondly, you have to make a trading account. And thirdly, you have to show how the items will be shown in the statement of financial position. These 3 things we have to do. Now, inventory of raw material on 1st January 2016. 1st January 2016 means beginning of the year. So opening inventory of raw material 7,200. Then inventory of raw material on 31st December 2016. Closing inventory of raw material. So we are given opening inventory, we are given closing inventory of raw material that will be taken under raw material consumed. Next, work in progress on 1st January 2016 and work in progress on 31st December 2016. So opening WIP, closing WIP. So we are given raw material opening closing, WIP opening closing. Apart from that, 2 items are missing there. So you write it with a pen here itself, inventory of finished goods. It is not printed in the paper. In the worksheet it is not there. Now I am dictating, write it down there itself. Inventory of finished goods on 1st January 2016 is equal to $31,500. $31,500. Assalamualaikum. हेलो, अस्सलामुअलैकुम। वालेकुम सलाम। हाँ घर पे ही हूँ। अच्छा 10-15 मिनट में आ जाइए। 10 मिनट में मैं इस पर काम कर रहा हूँ। 10 मिनट में ख़त्म कर दूँ। 10 मिनट के बाद आ जाइए। अच्छी बात है। So inventory of finished goods on 1st January 2016 31,500 and inventory of finished goods on 31st December 2016 39,600. These 2 lines are not there in the question. Now you write it down there itself. Inventory of finished goods at the beginning of the year 31,500. Inventory of finished goods at the end of the year 39,600. Right? Now year to 31st December 2016. So end of the year, what are the values given? Wages, direct wages 35,640 and indirect wages 22,950. Direct wages will be taken under prime cost and indirect wages will be taken under factory overheads or manufacturing overheads. Then purchase of raw material, fuel and power. Fuel and power will be taken under factory overheads. Direct expenses, it is a part of the prime cost. The prime cost consists of raw material consumed, direct wages and direct expenses. Then factory wages, this will be taken under factory overhead. Carriage inward on raw material. Carriage inward on raw material will be added to purchase of raw material. Then revenue of finished goods. Again, one line is missing there. Last line you write down, revenue of finished goods is equal to 2,75,000 or 275,000. 275,000, that is revenue of finished goods. Last line you write it down. Next, rent of factory, these are factory overhead. Depreciation of factory plant and machinery, that will be taken under factory overhead. Internal transport expenses, that is also factory overheads. Insurance of factory building and plant, that is also factory overheads. General factory expenses, these are the indirect factory overhead. So all these items should be taken under indirect factory overheads. That's all. So 3 items we have to make. The first item is manufacturing account. See here, lawn mower manufacturer, manufacturing account for the year ended 31st December. Raw material consumed. So for calculating raw material consumed, first we take opening inventory of raw material. Inventory of raw material on 1st January, opening 7,200. To this we add purchase of raw material given in the problem, 78,300. To this you add carriage inward, transportation cost on purchasing the material, that will be added to material only. So carriage inward will be added to purchase of raw material. So total comes to 87,300. From this deduct inventory of raw material at the end of the year, 31st December 2016. Closing inventory 9,450. Deduct 9,450, you will get 77,850. This is the raw material consumed. So one item we got raw material consumed. To raw material consumed we add direct wages. It is given in the problem, direct wages are 35,640 and direct expenses are given 1,260. So remember, raw material consumed plus direct wages plus direct expenses. These 3 combined together constitutes prime cost. Now after calculating prime cost, we have to take the indirect factory overhead or indirect manufacturing cost. Anything you can say. So indirect manufacturing cost, fuel and power, indirect wages, factory wages, rent, depreciation of plant, internal transport expense, insurance, general factory expenses. Just now I have told you in the problem, all these items are given. These are the indirect manufacturing cost or indirect factory cost. You take the total of all these items, 70,680. Now you add up prime cost 1,14,750 plus 70,680. You will get total 1,85,430. To this 1,85,430, add opening inventory of WIP and deduct closing inventory of WIP, work in progress. So add work in progress on 1st January 2016 given in the problem, 3,150, add up 188,580 minus work in progress on 31st December 2016, end of the year, 3,780. Finally we'll get production cost of goods completed. That's all. This is the end of manufacturing account. So whenever you have to make the manufacturing account, remember the procedure. First you calculate prime cost, then you calculate production cost of goods manufactured. That's it. The second item, it is asking you to make the trading account. How the trading account will be made? See here. Income statement. Income statement for the year ended 31st December. So revenue. Revenue is given in the problem, 2,75,000. Then to this from revenue we deduct cost of sales. How to find out cost of sales? Take the opening inventory of finished goods. Opening inventory of finished goods. So inventory of finished goods on 1st January 2016, 31,458. Add production cost of goods completed. The production cost of goods completed, we got it here, 184,800. Add up 184,800. We'll get 216,300. From 216,300, deduct the closing inventory of finished goods. So closing inventory of finished goods is 39,600. Deduct 39,600, you'll get 1,76,700. This is the cost of sales. So revenue minus cost of sales, you will get the gross profit. That is the income statement, trading account. Next thing is, it is asking you how the items will be shown in the statement of financial position. So we are making an extract of the statement of financial position, only a part. So in this extract of statement of financial position, we are going to show the current assets. Under current assets, all the three inventory items we have to take. That is inventory of raw material, closing inventory of raw material, closing inventory of WIP, and closing inventory of finished goods. All the three inventories closing you should take. Raw material, you can see here, raw material closing is 9,450. This is the closing inventory of raw material, 9,450. Closing WIP, here you can see work in progress at the end of the year, 3,780. This 3,780 will take. Now closing inventory of finished goods, you can see here, closing inventory of finished goods, 39,600. That's it. So this is the end of problem number 4. Come on, now we'll start the next problem, that is problem number 5. See carefully the 5th problem. Identify by indicating with a tick where in the financial statements each item would be shown. So a table is given, items are given, few items are given, and 3 columns are given, that is manufacturing account, income statement, and statement of financial position. You are asked to tick the mark where each item would appear. So we will see first item, purchase of raw material. The raw material will be taken in manufacturing account. So we put a tick in manufacturing account. Similarly, accumulated depreciation. Accumulated depreciation will be taken in the statement of financial position. So here in the statement of financial position, put a tick mark. Next, carriage outward. Carriage outward is an indirect expenditure which will go to income statement. So carriage outward will be taken under income statement. Factory supervisor salary. So factory supervisor salary will be taken in manufacturing account. It is indirect factory overheads. So here under manufacturing account, I am taking factory supervisor. Similarly, purchase of finished goods. So finished goods will be taken in income statement. So under income statement, I am taking finished goods, purchase of finished goods. Next one is return inward. Return inward means sales return, revenue return. So revenue return will be taken under income statement. So here under income statement, I am taking the revenue return. Last one, royalty paid. Royalty paid are the direct expenses, and that is a part of prime cost. It will be taken under manufacturing account. So here under manufacturing account, we'll take royalty paid. That's all. So we have decided which item will be taken in which statement. Some items will be taken in manufacturing account. Example, purchase of raw material is a part of manufacturing account. Similarly, factory supervisor salary is a manufacturing account, is an item of manufacturing account. Royalty paid is an item of manufacturing account. Similarly, carriage outward is an item which will be taken in income statement. Similarly, return inward is a part of income statement. And next one is purchase of finished goods. That will be taken under income statement. But only one item is there which comes under statement of financial position, and that is accumulated depreciation on plant and machinery. That's it. So first A part we have completed. Now I am coming to the B part. See carefully. Dumadi, a manufacturer, provided the following information. So here Dumadi is the sole trader and they have provided the information. At 1st April 2018, beginning of the year, the inventories, opening inventory of raw material, opening inventory of work in progress, and opening inventory of finished goods. All the 3 opening inventories are given. Then plant and machinery cost 1,12,400, accumulated depreciation 65,400. Then at 31st March 2019, end of the year, beginning of the year 1st April 2018, end of the year 31st March 2019. So end of the year, what are the balances? Prime cost. So directly prime cost is given. So we are not concerned with opening raw material and closing raw material. Because while calculating prime cost, we have considered the stock of raw material, inventory of raw material. Then indirect factory wages, factory light, heat and power, other receivables, rent rates and insurance, inventories. These are the closing inventory. Inventory of raw material, inventory of work in progress and inventory of finished goods. Next page, rent rates and insurance are apportioned 70% to the factory and 30% to the office. Factory rent will go to manufacturing account, whereas office rent rates and insurance will go to income statement. So we have to bifurcate. 70% should be allocated to manufacturing and 30% will be allocated to income statement. Office will go to income statement. Factory will go to manufacturing account. Depreciation is to be provided on plant and machinery at 20% per annum using reducing balance method. So we have to calculate depreciation 20% on reducing balance method. Prepare the manufacturing account for the year ended 31st March 2019 starting from the prime cost. That means we have to prepare a manufacturing account, but we have to start from prime cost. Prime cost is given in the problem. So, one thing you remember, we are concerned only with preparing manufacturing account, not income statement. So, here you can see Dumadi, manufacturing account for the year ended 31st March 2019. Right? 2 columns you draw, amount, dollars. Prime cost is given in the problem, 274,410. 274,410 is the prime cost. To prime cost we add indirect factory expenses. So here indirect factory expense, indirect factory wages given in the problem directly I have taken 16,320. Light, heat and power directly given 9,620. Rent rates and insurance 25,200. How we got 25,200 in working note I have explained here. So actually rent rates and insurance paid amount is 37,800. 37,800 are paid, but it is given that other receivables, rent and rates. These other receivables, rent and rates are nothing but the prepaid, paid in advance. So during the year, rent rates and insurance paid 37,800. But in that 37,800, 1,800 is paid in advance. So deduct the prepaid. So here prepaid rent and rates 1,800. After deducting, we are getting 36,000 as the total rent, rates and insurance for the year. Now in the problem it is given 70% only should be charged to factory and 30% to office. But we are not concerned with office. We are concerned only with preparing manufacturing account. So only factory part we will take. So 70% of 36,000. 70% of 36,000 comes to 25,200. So 25,200 is the rent, rates and insurance here. Similarly, depreciation on plant and machinery. It is given in the problem 20% on reducing balance method. Reducing balance method means from cost we subtract the accumulated depreciation. We will get the net cost. On that net cost we have to calculate 20% depreciation. So here in working note, depreciation on plant and machinery, 20% on reducing balance method. So how we have calculated, see here. In the problem it is given net cost of plant and machinery is equal to the actual cost of plant and machinery is 1,12,400 and the accumulated depreciation given is 65,400. Deduct 65,400, the net cost comes to 47,000. On that 47,000, 20%, 20 by 100, you will get 9,400. This is the depreciation on plant and machinery. So here I have taken depreciation on plant and machinery 9,400. Now you add up these four amounts, it comes to 60,540. This is the total indirect factory expenses. Now you add up prime cost plus indirect factory expenses. Both will get 3,34,950. To this 3,34,950, add up opening inventory of work in progress and deduct closing inventory of work in progress. Opening inventory of work in progress is 3,600, add up 3,600. Then deduct minus closing work in progress 3,200 given in the problem. So deduct it 3,35,350. This is the production cost. Production cost, that's it. We have completed the manufacturing account, right? Now the third question, CBIT. CBIT, it is asking you, complete the table by indicating with a tick the effect each transaction would have on the profit for the year of a manufacturer. 3 items are given. It is asking you what is the effect of these items on the profit. Whether the profit will increase, whether the profit will decrease, or no effect. That's what we have to decide one by one. First item, purchase of plant and machinery. When we purchase plant and machinery, it is a capital expenditure. And capital expenditure will go to statement of financial position. It will not come in income statement. So, purchase of plant and machinery does not affect the profit. No effect on profit by purchasing plant and machinery. So, here purchase of plant and machinery, no effect. Next one, increase in the allowance for irrecoverable debt. Irrecoverable debt is a loss. An allowance for irrecoverable debt is an expected loss. When expected loss increases, the profit will decrease. So remember the rule. Increase in the allowance for irrecoverable debt will decrease the profit because allowance for irrecoverable debt is a loss. When losses increases, profit will decrease. So here, increase in allowance for irrecoverable debt, decrease in profit. Last one, increase in the closing inventory of finished goods. See here, when closing stock increases, profit will also increase. When closing stock decreases, profit will also decrease. So here there is increase in the closing inventory of finished goods. So it will increase the profit. That's all. CBIT completed. Now I am coming to the DBIT. Discuss the reasons why Dumadi uses reducing balance method to depreciate his plant and machinery rather than straight line method. Normally, very commonly, we use 2 methods of depreciation, straight line method and reducing balance method. So for some assets, reducing balance method is suitable. Some assets, straight line method is suitable. Both the methods will give different amount of depreciation. Now it is asking that Dumadi, the present sole trader, he is adopting reducing balance method. Why he is adopting reducing balance method to depreciate plant and machinery rather than straight line method? We have to give some conclusions. First case, Dumadi uses reducing balance method, RBM stands for reducing balance method, to depreciate his plant and machinery account, as this is the most suitable method for this type of asset. What is the type of asset? Plant and machinery. Remember, the plant and machinery will not have a long life as that of building. Plant and machinery will not have a very long life. And the depreciation, the rate of depreciation on plant and machinery will be fast, quick. That's why it is better to adopt a reducing balance method, not a straight line method, to depreciate plant and machinery. This point you remember. Not only in this problem, but also in any of the problem, if it is asking you why we depreciate machinery by reducing balance method. So our conclusion is reducing balance is the most suitable method of depreciation for plant and machinery. Secondly, this method may have been chosen because this plant and machinery may become outdated quickly. Just now I told you, the life of the plant and machinery will not be as long as that of building. the life will be a little bit lower. So that's why it depreciates quickly. So it is better to adopt reducing balance method. Next one, the asset may have lower maintenance cost in the early years, or there may be greater benefit to the business in the early years. See here, when we purchase a new machine, the benefit which we derive will be more during the early years because the maintenance cost will be lower. The maintenance cost will increase as the life passes by. Over a period of time, after a period of time, maintenance cost will increase. In the initial years, maintenance cost will be less. When maintenance cost is less, we can provide more depreciation. So it is better to provide depreciation on reducing balance method because in this method, in the initial years, depreciation will be more. In the later years, depreciation will be less. So maintenance cost less, so we can provide more depreciation in the initial years. Later years, when maintenance cost increases, then at that time depreciation will be less. So there is a justification that we have to provide more depreciation in the initial years and less depreciation in the later years. That is the reason why we adopt a reducing balance method for depreciation. If Dumadi have chosen the straight line method, the same amount of depreciation would have been charged every year. One of the features of straight line method is the same amount of depreciation will be charged every year, irrespective whether it is used more or less. So that method is not suitable. Straight line method is not suitable for plant and machinery. So D bit completed. Last E bit. State 2 reasons why non-current assets depreciate. Depreciation is provided on non-current assets. Why? What are the reasons? Only 2 reasons it is asking. But I will tell you 4 reasons. And a number of reasons are there. But it is asking only 2 reasons in the problem. So here first is wear and tear. When we use the non-current asset, its value will get decreased due to wear and tear. So wear and tear is the first reason why the non-current asset will depreciate. Second, obsolescence. Obsolescence means outdated. As the technology is increasing, the non-current asset will also become outdated because advancement of technology. So due to this obsolescence, we have to provide the depreciation. Third one is passage of time. Some assets are there whose value will decrease not by usage but simply by passing of time. As the time passes by, the value will get decreased. That is also one of the reasons. Last, one more reason, depletion. Normally depletion is a word which is applied for extracting the natural resources. Example, when oil is extracted from the oil field, when stones are extracted from the earth, when coal is extracted from the earth, depletion will be used. Because we go on extracting the resources, its value will decrease. That is called depletion. So these are few reasons why we provide depreciation on non-current assets. So in this video, I have completed 2 main problems on manufacturing account. Problem number 4 and problem number 5. Inshallah, we will continue the next problem in the next video.